Credit cards are a great way to build your credit.
But many people are lacking the critical knowledge that could help them get ahead financially.
A good understanding of a credit card and how it works can help you to build your credit, unlock opportunities, and avoid costly mistakes like the ones I'm about to share with you.
Here are 6 common credit card mistakes to avoid like the plague.
Number 1, not getting a credit card early enough. If you're over the age of 18, you should have a credit card. When you start your credit journey, you have no credit history. This in many cases is worse than having bad credit because lenders have nothing to go off of. Getting a credit card and using it responsibly is a good way to establish your credit history, as well as help you to practice using your credit. One of the factors that affects your credit score is your average age of accounts, or AAOA. This is calculated by finding the average of certain types of installment and revolving accounts. A credit card is classified as a revolving account, and the earlier you get one, the sooner you can start increasing your AAOA. Keep in mind that this is an average, so every time you get a new card, it will lower your AAOA. All the more reason to start early. A good average age of accounts is about 7 years, so if you start early, you can achieve top-tier credit in your early 30s. AAOA accounts for 15% of your credit score, so while it's not a huge factor, it does contribute to your overall credit health. Number 2. Overusing your card. This is an issue as old as credit itself. People get credit cards and assume that they have free money. While a credit card was designed to buy things, it's more of a tool than actual money. One of the easiest ways to get off course is to spend above your means and find yourself in high interest credit card debt. This can be crippling to your finances and become a significant setback in achieving your goals. The best way to use your credit card is as a vehicle to take money that you already have and spend it to buy things you can actually afford.
Avoid using cash advances as well, which have high fees and astronomical interest rates.
Also, try your best to pay your card in full every month so that you can avoid making mistake number 3, carrying a balance. About half of all credit card users carry a balance according to Federal Reserve data, and the average credit card balance is about $5,200. Many people avoid credit cards altogether because they want to avoid the high interest rates, but the reality is that you're only charged interest on purchases if you carry a balance over to the next month. Credit card companies want you to carry a balance so that they can charge you interest. That's why they only require you to pay the minimum balance, which is drastically lower than the actual balance. This is a trap though. Ignore the minimum payment and pay the balance in full every month to ensure that you aren't giving money up to the credit card companies. And make sure you don't miss any payments either. A late payment is an automatic $30 late fee on top of any interest you may have incurred.
There's a lot of enticing credit card offers out there, but the fees you incur for failing to use your card responsibly will offset any benefits you get from any credit card offer.
Number 4, maxing out a card. This is basically a reiteration of my earlier point. Maxing out your card is another trap that will set you back financially. Unless you plan to pay the balance immediately, maxing out your card is rarely a good idea. It can also lower your credit score as it will increase your credit utilization. This accounts for 30% of your credit score, so the impact can be significant. High utilization communicates that you may be having trouble controlling your spending or paying your bills. On top of that, it could be a huge stressor for you. Number 5. Not using your card enough. This may seem counterintuitive given my previous points, but one mistake I personally see a lot is people failing to use their credit cards enough. Credit cards have several benefits that range from points to different protections and perks. I personally have an Amex Platinum card, Apple Card, and Chase Sapphire Preferred card, and each of these cards offer different perks and points that I can use to save money and get things that I want. Between these cards, I've accumulated thousands of dollars in points and even cash back. Speaking of points, if you like this video, why don't you go ahead and point your cursor at that like button and gently tap it. Using your credit card to spend money on things you were going to buy anyway will enable you to build up points that you can either use to lower your balance or get something else that you want, to include travel. I've seen people make a game of using their points to get a free vacation. Credit cards also have fraud protection built in. If your debit card is compromised or misused, it's your problem because the cash is gone. But if a credit card is compromised or misused, it's the bank's problem because they put up the money for the transaction in the first place. I've been the victim of credit card fraud a few times, mostly from data leaks from stores that I shop at. These issues were resolved without me even having to do anything, mainly because this was the bank's problem, which means they were proactive in resolving it. While using a debit card may seem a lot simpler, credit cards are a way to level up your daily spending while protecting yourself. Number 6, closing a card. I mentioned average age of accounts earlier, and this basically ties into that. When you close an old credit card, it lowers your average age of accounts. I personally have 2 cards that I opened in my late teens and never use now. Ditching them would lower my AAOA and credit score, so I keep them active and monitor the accounts. There may be instances where it makes sense to close a credit card account, but typically if you're trying to improve your credit, this is counterproductive. Since you stuck with me this long, here's a bonus tip to show my appreciation. Number 7, not choosing the right card for your needs. There's a ton of cards out there with different benefits, terms, and requirements. Understanding where you are in your financial journey, your needs based on your lifestyle, and your overall goals will help you in selecting the right card for you. Credit card companies and merchants really work hard to pull consumers in with introductory offers and free gifts. But 10% off a single purchase isn't worth the annoyance of getting a credit card that only works at a certain store that you barely shop at. I'll go deeper into determining what card is right for you in a future video, so make sure you like and subscribe for more informative content like this.
My goal with this new channel is to give you the tools and info you need to level up and take greater control of your life. Until next time, thanks for watching.